Hey, what is going on, everybody? Just double check my audio. All right, we're good. Welcome to another episode of the Rapid Review, a little midweek in replace of the Bobby breakdown write ups. Figured we'll go over everything that went on in today's market and get everybody prepared for the last day of the trading week tomorrow. But without further ado, it's time for the Rapid Review. All right. You guys know, as always, disclaimer educational, informational purposes only, not financial investment or trading advice. All right. For this, Mike is working beautiful. For those who want a quick little update, Microsoft had an update to Windows that completely screwed with my software that does some noise canceling and things like that. So yeah. All right, let's start off. We're going to do things a little different. Let's start off with the kind of index charts. I'm going to try to do this a little closer to how I do the Bobby breakdowns because that's just kind of how I do my weekend routine. I'm also going to use this little, I don't know if you guys can see, might not working. I have a little highlighter. It's not working on this, but all right. So, kind of picking up where we left off, yesterday's Bobby breakdown. Um, I was talking about, right? We're still in this choppy environment. A lot of people out there saying expectation breaker or saying that, we're getting the signals because we popped back above the 50-day and we got above all moving averages. And like I said yesterday, great signs, very, very good signs to see that. But we're not kind of out of out of the woods yet. We're still in float within this downtrending line, just kind of a rough line I'll throw up there. And the market still has a lot of work to do to kind of prove itself. So, like I said, I personally didn't yesterday make any purchases. I have still my same two positions in Eli Lilly and in CrowdStrike, and that was enough exposure for me, about 50% exposure. I did not want to increase past that, given that we're in the choppy environment. And look, we've had a great beginning of the year. So, my thing is, why force things? Um, I've learned over the years that in market environments like this, sometimes patience is a lot better. And I had full understanding that this could be the start of the rally. We could skyrocket up from here, but I'm comfortable with that happening and me being locked out of some names. So, as positive as things looked yesterday, today, the index don't look too bad, but the actual stocks definitely got hit pretty bad, especially a lot of the tech names that we're looking at, and we'll get into that. So, what I normally do, I'll come over here and oops, wrong one. I'll jump over to the 15-minute chart, and I just like to get a sense of like what went on during the day. A lot of times, if I'm busy, I'm not maybe watching the actual market every single step through the day. Um, this just tells me kind of like what went on with the action. So you can see we gapped down right at the open. We quickly reversed. We kind of rose back up. We ended up getting green for a very, very short time, right around 11:15, and then we rolled over and came back down. We ultimately closed pretty much where we were at the open. Um, and then I'll come over here. I'll look at the S&P. S&P, as it's been looking a little bit stronger, still gapped down, still rallied, turned even more green, still reversed, but closed a little bit above the open for the day, which was over here. So, um, if we're looking at that and what we just had happen more on the just today's bar. So the positives. I like to start always off with the positives, then we look at the negatives. The positives, we found support clearly at the 10-day simple moving average. The 10-day simple moving average is now back above the 21, but the 21 has crossed. Sorry, we found support at the 21 EMA. The 10-day simple moving average has now crossed not only below the 21 EMA, but also below the 50. Now, this isn't like an indicator or a signal for me, as much as it just gives us an idea of what's been going on. Um, so obviously, we're starting to see the shorter term trend really start to dip below the longer term trend. So good to see that. Good to see that even though we tried to sell off, we found support at that 21 EMA because it's an important area. Bad to see that we did attempt to make that kind of rally and try to turn green for the day. we were rejected and we came right back down. The reason I drew this trend line, and I don't put a ton of weight, it's just these are kind of like the expectation things, like we were talking about. I forget who I was talking about. We were talking about a little bit on X. You know, you set these expectations, and if they break, that tells you, gives you a little bit of something. If it doesn't break, then it kind of tells you you're really kind of falling in that same trend. So in the short term, you know, we're rejecting now. We got one, two, three areas where it seems like, even maybe four, in this downtrending line. Um, so negative to see that, but we're also on the positive side. Again, we're holding above those lows down here. And then there is also this other kind of low on May 12th. So I'm looking at all these different price levels, and I'm sorry, I've been doing this kind of on the fly. This is essentially what goes on in my head when I'm sitting down before I make the write ups for everybody. So I'm seeing like, okay, we're finding support at the 21 EMA. We're back inside of this low. So we kind of dipped below twice and kind of rebounded. We're getting the moving average cross, which is negative, but we're in that downtrending line and clearly getting rejected there. Looking very much like we're making lower highs, but also higher lows. Um, and that's sometimes what you end up seeing in the choppy market. That's a lot of times what goes on is it's not a clear trend, it's this sideways action. And we're clearly range bound within these highs and these lows. And a lot of times what you're going to expect here is exactly what has gone on this week, right? Exactly what we saw. Monday and Tuesday, super, super strong. You get people saying, here we go. Look at this. We're back. We're back, baby. And then we have a day like today. And when we look at some of the stocks, you'll see a little bit more what I mean, because you're not really getting the full context of that. You know, it doesn't look too bad today when we're talking about what went on in the market. But um, so really the key levels for me right now, the shorter term is going to be these highs over here. The trend line, it's something just to look at. Nothing that like weight puts too much weight. Um, Holding above the 10, the 21, the 50, which are all kind of converging right here, and then really looking at these prior low levels. Anything really just floating in between here to me is just, it's just sideways chop action, and is where I want to try to really, really be patient. Um, what I would like to see, because I know this is sometimes, um, let's see, I view it as constructive. Yes. And that's exactly the point I was actually thinking to try to convey to people investing is, the question becomes, all right, if I'm sitting on my hands and I'm being patient, well, at what point am I making a decision to either get into the market, or am I deciding that, like, okay, I'm looking at this more as like a downtrend and looking for some sort of follow through day? That for me is, I want to see some tightness and taking out some key levels. So, what I think would be beautiful is if we can really tighten up the range, right? We're starting to see that, right? We had this big swing high to low here, so shorter swing high to low here. Can we get even a tighter, more shallow, almost like a VCP pattern, high to low? And then start making our way up and start seeing that, okay, we take out a short-term high, like maybe this level, pull back and then take out that level, and then each other level above that gets me more and more bullish. That's ideal. Obviously the market doesn't always follow uniform fashion and doesn't always give us exactly what we want, and that's unfortunately part of it. To the downside, what's going to make me more bearish is really taking out these lows. We could dip and chop around these moving averages. That's not really changing too much for me, but taking out any of these lows is really going to change my view on things. So um, it's kind of a wait and see, right? Um, See what, if we can have another kind of short term area to look against. If not, then I'm probably going to be looking at somewhere over here. So looking really even. I want to see something. What's this look like right here? And this is sometimes like, everybody says, you know, technical analysis. There is a little bit of an art to it. You know, I'm looking just at these highs here. I don't think that's really too significant of a level, but so really right now it's a patient wait and see. The S&P, like I had kind of mentioned the other day, looking a lot more constructive, right? A lot more sideways and not as much of a downtrending kind of of look to it. Especially what's really bullish about what I'm seeing with the S&P is that May 7th low. that we really only had this one close below. Everything else has kind of just been shakeouts, and we've really held above the 50 aside from this one close here. Just everything looking a little more constructive on the S&P, which also could lead to showing that we're seeing some sort of sector rotation away from what kind of led that big bullish uptrend in tech. So we'll look at the Dow quickly. Dow just kind of trending, just continuing to trend higher. Russell continuing to trend higher, which is also very bullish to see that the small caps are still performing well, and then even the mid caps kind of tending to perform fairly well. So to summarize what I'm looking at, look, I think everything looks constructive. I don't feel like, oh my God, this market's gonna crash or this market is doomed for a downtrend. It's just how long is the sideways action before we break in a direction up or down? And this is the type of market that annihilates traders in our style. When you have a trendless market, a sideways market, it is very, very tough to gain some headway. And when you start getting a lot of small cuts and a lot of times you're getting stopped out and a lot of volatility, like you see in the sideways action, you start giving back a lot of your equity. And that's not what we want to do. We want these trending markets. We don't want these sideways choppy markets. Now, for the shorter term trader, for the swing trader, there is definitely a case for being able to trade in these markets. It's just going to be on a quicker time frame. If we were to pull back, find support somewhere around here, and then get another really strong, powerful move, that could be an opportunity to get into a couple of quick, a couple day swing trades, like holding for a day or two, and if that's your type of style. But for me, it's easier to sit out, being that I tend to float between the swing position trading style, and that's just kind of how I'm looking at what I have here. So that's kind of it for the actual chart analysis. Let's go back and just take a look at some of the stuff over here. This stuff kind of staying on the same side. Exposure levels, I'd probably argue you could kind of see it in both sides. I'm sitting at 50. I think there are some people that might be 60 to 80, especially the longer term position traders that have maybe some of these names like MU and Sandus that haven't even really broke the 21 EMA. Maybe your shorter term traders might be closer to the 40 to 60 range. So just a kind of rough parameter here. But again, I'm around 50. The Webby trend showing sideways. The 50-day trend now signaling uptrend with the most recent action. This is a more macro, longer term trend. So in markets like this, we are going to see a little bit more of like false signals up and down and chopping. But this Webby trend, I think, is really, really great, specifically for my style. And this choppy is really telling you exactly what you need to hear. And there's our off the high levels. Closing range. So closing near the upper ranges for the day. Oh wait, no, hold on. Let's do this. It's on my weekly. I want to be on my daily. All right. So that's so to say something didn't seem right. So what we're seeing here, kind of closing in the lower half on the Nasdaq, same just below the lower half, more mid range on the S&P, lower half, lower half. The big thing here, the opening gap was down. From the open, we ended up basically being break even, and there's your day change. So actually, we did pretty much almost return to exactly where we started on the Nasdaq, and we're just a little above, just like we saw. So another just quick visual that lets me look at what's going on with the indexes. And then our moving averages. These lines are showing we've regained them from last week, so we're still in all green there. All right, distribution days. So no change in distribution. I didn't mention that before, but today was definitely a low volume day. Yesterday we had lost one day on. We had lost this 522 day on the Nasdaq, which brought us down from 9 to 8. But other than that, and that was a stalling day that we lost. Other than that, we're still sitting high 8 distribution days on the Nasdaq and 5 distribution days in the S&P, and that's definitely playing into my uh, my stance of being a little bit more cautious is because we have so much selling coming in the market. We haven't really shook any of this out, and we're moving sideways. It's telling me to be a little bit more patient. And then there's just the visual. You can see obviously a lot of clustering happening within the Nasdaq, and this is this past month. All right, let's take a look at what went on sector wise. So for the day, communications, financials have definitely been something that's been showing some strength. Healthcare number 4 for the day, also an area that's been showing strength, but tech really getting hit pretty bad, showing the laggard for the day. We'll jump now over to Deepvue and we'll take a look at just how the actual charts look on these. And all right, so we'll start off communications. And this is where it's important. Like, we can have a strong day, but if we're looking at what went on with communications, like, this is still in a downtrend. But this is where I was talking about financials. I had mentioned over the weekend, even yesterday's write up, financials really, really tightening up, really, really moving sideways, and seeing this real big surge here, higher volume over here. Financial is definitely an area that I'm starting to pay attention to as we've kind of gotten above the 200 day. We're starting to trend up. We tightened up really good, and we're looking like we're trying to take out and continue to make higher highs and higher lows. We did reject a little bit off of that kind of day's high, but overall, just looking at where we closed, we got above a lot of this price action. So really, really positive. Financial is definitely a sector to pay attention to. Consumer discretionary, it's been popping up a lot, but hasn't really shooken its current trend. Healthcare, healthcare acting completely healthy. We kind of got choppy, we rolled over, we based, we kind of started to climb and make those higher highs and higher lows. We broke out to all-time highs on a really, really explosive few days, and now we've kind of pulled back and taken a break right at those all-time highs. Much expected break right around those levels. But good to see kind of holding above yesterday's low and moving sideways with the volume a little bit lighter in this, high handle or whatever you want to kind of type of call it. So good to see that there. Materials moving sideways, volatility maybe tightening up a little bit, but nothing that's screaming at me. Um, Real estate's just been kind of crazy, choppy, volatile uptrend. Consumer staples is nothing to write home about. Energies has really just been kind of rolling over and collapsing. Industrials trending upwards, breaking out to all-time highs. Another group to pay attention to. Utilities not looking too great, still in an overall downtrend. And tech. So tech, very much similar to how the Nasdaq is looking, as you'd kind of expect. Big, strong uptrend. We're starting to break. We're looking like maybe we're getting some VCP. We're holding above that 50-day simple moving average, and we're chopping sideways. Question is, how long do we chop sideways? Did this go on? If we're looking at some of these, not saying it's going to do something like this, but are we going to do this for multiple weeks? Are we going to do this for a couple of days? Are we going to do this for months? Nobody truly knows, but nothing right here saying again that we're completely resuming the uptrend. Nothing saying we're breaking down. Macro trend still being held up, but in the short term, we're definitely in this choppy action. So overall, just summarizing what I'm looking at: healthcare being a group to be paying attention to, financials a group to be paying attention to, industrials a group to pay attention to, and still keeping an eye on tech, and especially some of the few areas that are starting to show strength that might be rotating out of the subgroups that had shown strength and moving into some new areas. So, all right, and you guys, again, chat's open. Agree, disagree, questions, let me know. All right, let's jump back over and we'll start taking a look at my sub industry groups. So we'll look firstly, this is what I share every day, the leaders for the day. Blockchain technology showed a big jump there. Crypto infrastructure, HR staffing, brokerage platforms falling underneath the financials, Hood playing into a big piece of that. What else? Software kind of showing its head again, and real estate, educational, and industrial gases. So a lot of what we saw just kind of broken down into tighter, smaller groups. So the crypto blockchain stuff definitely an area that showed strength today, financials, and then some of the software. On the losers for the day, memory. Memory is really, well, I'm going to bring up a lot of those names. Really starting to get wide, loose, and choppy. Some of these other groups as well. Crypto mining getting hit, AI, cloud, neo infrastructure, like a lot of the stuff that was leading, a lot of the stuff that everybody's like, they're back. Everybody's like, oh, the leaders are leading again. Getting hit pretty bad today, and we'll look at those charts. So let's look at the rankings. I don't get a chance to do this during the week because it's a little difficult to share, but I had showed this over the weekend just so you guys can see one of the updates I made for my long term and my short term. when you're looking at my long term, this is your 3 to 12 months, your real big position trading. And then when you're looking at your short term, it's around that 1 month time frame for your shorter term rotation and short term swing trading. So from a long term perspective, as I flip back and forth on you guys, from a long term perspective, look, you still have these names leading that have been leading for a while: the AI stuff, the semis, the photonics, the memory, satellites, AI, LiDAR, crypto mining, right? You're still seeing space economy. We started to see some things making its way up there, like genomics, pharmaceuticals, and that healthcare stuff really pushing its way into the longer term trend. But I think with the market we're in right now, this is something that I kind of get a little bit more patient. This becomes very, very useful when we're in a multi-week downtrend, or even multi-week sideways choppy action. Right now, this is something that I'm putting a lot of weight into, is the short term. Now, it doesn't necessarily mean that these are next leaders, but it just shows me in the current market what is showing relative strength in this choppy action in the last month. And I think the biggest thing has been so clear is the healthcare, specifically within the biotech, genomics region, GLP-1 specialized group over here. You can see these names. Like, these are the names that are really kind of starting to show some short term strength. Not saying that a lot of these are in a full uptrend. Like, if you look at Hims is really looking strong, but hasn't really broken into like a Stan Weinstein stage two. Cybersecurity was a group that showed an immense amount of strength and then kind of pulled back, tightened up, and that's what led me into crowd because of how tight of an entry I was able to get in on that. And then everything else we're really seeing, like the big thing right now is being the healthcare, and the cybersecurity. LiDAR also showing some signs that it wants to start making a move and change its trend. Other than that, like we just saw memory starting to drop down out of the short term. It was up here. This shifts a lot over the weekend. This was up here, but now it's not. And then also on the source side, the confirmed means that it's very close to its long-term ranking. So if we're actually looking at these long-term rankings, all these right here in the top 40. Doesn't Oracle have great financials? Oracle. Yeah, we'll look at Oracle. We'll talk. We can look at that. I know that's been getting hit pretty bad. Um, but the financials, yeah, financials may lead, right? The financials may put you in an area to get into some names, but it doesn't necessarily mean that it's going to produce the price action. Price action trumps all. The financials are really just the opportunity to hone in on potential big growth names. Remember reading somebody's deep dive back during 2024. Yeah, Oracle's been a hot topic over the last couple of years because of its big place within the everything. It started off, I think, a lot within the data lake and the just data side of things, and now it's obviously a big piece within the AI world as well. Oh, it broke out today. All right, we'll look at Oracle and we'll take a look at that chart as well. But yeah, so I think the big thing really to really pay attention to right now, for me at least, is the cybersecurity and the healthcare space. That seems to be what is showing the most strength, while still not forgetting about some of these tech names that are holding up, especially within memory. And we'll talk a little bit about that. And when we start looking at some charts. Other than that, we got the market closed on Friday. You guys know that in the US for the July on Saturday, so the market holiday is on Friday. Earning wise, we really have nothing to write home about. This is just my kind of filter for earnings, and that's the only name that's really getting produced. Earnings season's kind of over. So that kind of summarizes where we are in terms of data. Let Oscar, not Oracle. I was gonna say, I thought Oracle was getting hit pretty bad. All right, so let's jump over to Deepvue. You guys know the deal. I'm a Deepvue partner. This is a tool I use for all my stock screening, chart analysis, fundamental analysis. If you are interested, link in the description. Get you a discount code or a free trial month, depending on where you're at in your experience with Deepvue. And if you got questions, let me know. They are doing a lot. They just transitioned to their full new chart engine. And now they had just said today that there's a lot of new stuff that's going to be coming out soon, while they're still just making sure things are running tip top shape at the same time. So, um, don't see many people integrating AI and doing the stuff that they're doing. Um, and honestly, it's just for the price point, you're going to get no tool that even comes remotely close. All right. First, as I always do, we'll talk about my positions. Like I said, I basically have a 25% position in crowd, 25% position in Eli Lilly, a little bit bigger in Eli Lilly. It's like 20 something and higher, like lower 20s, higher 20s, but 50% overall exposure. And everything acting well. Um, I was entering down here. I added a little on some retakes. I added a little on the breakout, and we're kind of now just pulling back, which is very, very much warranted after this massive move off of these moving averages and pulling back on low volume, taking a break. Name is definitely one of the leaders within the healthcare market. It has the kind of fundamentals, it has the story, it has everything for a CANSLIM stock. If you're a CANSLIM trader, this was one of those names that definitely should have been on your radar. And whether you had bought here, got shaken out, rebought in, whatever it is that you have made to you, there's multiple ways to kind of get into this name. Um, whether it be here, but get stopped out depending on how wide your stop was, re-entering here, entering here, entering here. There's so many different ways to get in on this one, depending on your style. Um, but this is definitely one of the leading names, I think, right now, and we'll see if it can continue to hold that. Crowd, like I said, a lot of those cybersecurity names kind of just completely rallied off this kind of sideways bottoming action, retook all those moving averages, left everybody in the dust. But as we know, things start to correct. It got down, it tightened up real nice, and then this is where I started kind of building my position. Possibly, we'll see. I might look to add on a breakout. If the market continues to act the way it's acting, I'll probably just sit with my kind of current position right now. But if we do get a handle and I can kind of tighten up some risk, I may look to add to that. All right, let's start going through some of these names. Just because I talked about it, I know investing. I know you didn't mean to bring this up, but okay, yeah, Oracle. Yeah, like so Oracle's, fundamentals are starting to decline, but yeah, this name is collapsing. Collapsing. This is great last year. We are about 61% off highs. So I don't know how many people that want to hold into something like that, but yeah, there you go. Okay, he meant Oscar. Oscar Health. Beautiful, beautiful weekly chart on this. We are now last quarter looking good, triple digit earnings, increasing sales. Annual earnings, not so great. But it looks like things are starting to turn around there. Annual sales are good. Institutional sponsorship is good. ATR is actually in an area that I really like in that 7% ish range. ROE is beautiful. So overall, this name looking really good, and we know it's playing within the healthcare space. One of the cool features within Deepvue is I can come in here and just say, what does Oscar do? Let that kind of start doing its little process here. Ooh, that's a new little update. That's new. I like that. Good stuff, guys. I like that. Modern healthcare insurance company, healthcare tech firm, healthcare and tech, full stack AI powered AI. There's your keyword. Insurance technology makes money, premiums, technology licensing. Okay, all right, cool. So you get a general idea what this company does. Yeah, this name's super extended, right? Like if we come in here even on the daily, like this name is just to me very extended. Possibly depending on your style, if you're somebody that likes to buy off of the moving averages like that. Um, Broke out, extended, moving, looks beautiful, cleared this big long term base. The longer in the base, the higher in space, the deeper in base, the higher in space, whatever you want to use, whatever. Long periods of consolidation producing bigger gains. So this name is moving up and moving rapidly. For me, I would like to see this tighten. I would like to see this flag out a little bit, down, trying to pull back, and then it'd be something I'd probably get interested in. But as of right now, if you're in it, this name is beautiful. If you're not, I look at this as extended in my way of looking at things. All right, Liz, you want to look at Viking Holdings. This came up on one of my screens, but it's not on my list because this is extended. It is performing kind of well. I could see like, we like we just couldn't a lot of resistance to the upside here, pulling back to the 10, but giving on the massive move that this thing has made, it's not entirely concerning to me. I'm not going to go through the fundamentals on this. You guys can see them all on the screen. You could pause and kind of take a look at this. But clearly, this is performing well. Clearly, this is trending upwards, and seeing that kind of holding above that whole 100 number, really, really positive action. And this is what the Viking like vacation company, yeah, so performing well. This is a good name, but extended. No really entry on this. APH, we had talked about this one over the weekend. This was one of those names that yeah, again, really nice big base. The fundamentals look decent on this one. We broke out yesterday. Now we pulled back and squatted, but we're holding above that base. So really, really good there. I would like to see this kind of go sideways right above this base and give a tighter entry, especially in this market. Not looking to buy breakouts as much as I'm looking for more low risk tight entries. Earlier in an uptrend around a follow through day, I'll buy something a little bit more extended off of moving average as it's breaking out, showing relative strength, something like this, being a little bit more patient. But this is definitely one of the names, as you can see, it is on my spotlight list, that red list, looking super strong, very, very nice. I do like this name. If you have your way of getting into it, great for me. Just waiting, it's a little extended. AGX. Aragon, industrials. Kind of a little sloppy on the base. I mean, I could see, right? Missed that. Oops. I want this. Oh, they just did that new magnet. I gotta get used to this. I gotta snap. There we go. All right. Wow, that's a lot better. Even the new drawing update tool looking nice too. I like it, guys. Good stuff. Deepvue. Okay. Um, so I like that we climbed, we tightened, we broke out, and now we kind of pulled back and kind of squatting. And we're seeing that. And this is something I'm paying attention to. Some of these names that are breaking out, squatting, and holding above those bases in this type of choppy market, something to pay attention to. Um, Another one that I would like to see this tighten up, move sideways, kind of like you're going to probably see me say a lot of that with the market. A lot of these names I would like to kind of digest the chop, probably moving sideways and showing relative strength. And then let the market tighten, let these tighten, and then have it all go together. Doesn't always happen, but we'll see. All right, MXL. Been a long day for me. MXL. Pen, yeah. Look, this is a name. Minervini was on there talking about this, and this breakout's beautiful. And I don't think there's anything really wrong with this, right? I mean, it just had a big, massive move. It held above the open. It held above the lows. It had an inside day. Don't like the closing range on today, but I mean, that was a really, really strong move or super extended. And this maybe flag out. This could be another entry opportunity. Looks fine. Looks healthy. One of the definite leaders in the market. Could be choppy though, right? We could, if you're somebody who entered right around here on the breakout and maybe didn't enter down here, this is like no man, you're extended out of your buy point. You're sitting comfortably, you got some cushion, you could sit. Somebody buying a little later out of the breakout, this could get a little choppy, but we'll see. I think right now there's nothing, it's not doing anything wrong. And if you own it and you have some, and if you're green, I don't think there's a reason to sell this. PENG. Penguin Solutions. Don't know this one. Earnings coming out 7th. So we got earnings next week. Moving sideways, riding the moving averages, looks healthy. What is this? Semiconductors technology. So anytime I fall into these categories and I see some of these names, I ask myself, is this a leader within the space? It could be, right? The big concern right here is we got earnings coming up. So I wouldn't be looking to enter something this close to earnings, especially with that high of an ATR. Likely we just want to see this give an entry, but this is definitely a long-term watch. It's clearly got a lot of buying come in. Institutions are clearly pouring into this name. It's gotten a little, choppy and sideways and kind of flagging out a little, resistance to the upside, obviously, as you can see on the chart, but another name to watch. Where am I? Losing my place. Losing my place. Crowd looks like it's forming a cup with handle. Going back over to that. So I wouldn't say this is forming a cup with handle as of right now. Right? More of a traditional cup. Shorter cup, right? We're really only looking at 1, 2, 3, 4, 5 weeks. So for a traditional CANSLIM base, a little bit on the shorter side, but moving sideways, tightening up, hitting a little bit of resistance at those all-time highs. So we'll see. Does it form that handle? And that's what I was saying. If it does form that handle, I will probably, especially if the market environment looks comfortable, I'll probably look to add to this and get a little heavyweight in what seems to be leading, with very little risk because of the cushion that I've built in this. Investing. Yeah, I did buy this, as you guys know. How do you know where, how did you know to buy where you did on Lily? Did you get confidence when it bounced on the line? I'll go back to that. So this was just, we were starting to see these biotechs really show a lot of strength, a lot of the biotech names, and just even looking at the XBI getting this vertical movement. And it was just really holding those moving averages really, really tight and gave me a really nice tight entry. So really seeing this as one of the leaders within the biotech space, seeing one of the leaders within the healthcare space, seeing a really, really low risk entry, loving the uniformity of this pattern, loving this big, big base. The breakout, like I said, the high handle, the pullback and the squat back into base, right into the moving averages, respecting those moving averages. So from a technical standpoint, watch, from a fundamental standpoint, I think you guys will see what I was looking at there. But from a technical and an entry standpoint, we got multi-time frames, we got a big base, we got a breakout, we got a pullback, a squat, which is very warranted as it was starting to get extended, hugging into those moving averages, very, very uniform, clean, trending action, not choppy, supporting those moving averages with a low risk entry. That's what led me to get into the Eli Lilly. How do you know? Because he's an insider. Nah, yeah. Yeah, broke out on a shorter term kind of cheat entry. Exactly what Beta had said. I need an AI tool like that. Dude, Deepvue is great. Just be able to click boop. Oh, or an AI tool talking about insider trading. I don't know what you're saying. One of the two. AI is big as buzzwords investors. MXL catching up to 5 million day ride, 100%. Investing, you day trade Q and X this morning breakout. He can answer that. No, I'm in. Okay, we looked at some of those names. Basically trying to develop. NTAP. All right. NetApp. Very similar action. Very similar action of what I was just talking about that draws my attention. Big, massive move. Massive gap up. Not only that, it came out, broke out of that, squatted right here with a couple tight days, skyrocketed on earnings, pulled into the 21. Now, I don't like, how big of a pullback this is. More of like a base pattern forming. Obviously, you want to see it hold up again, but just a really big move. Not a high tight flag, not a power play because of how deep it pulled back, especially breaking out that low of the gap up. This name is one of those that I would probably look if you're have the room for risk and you think that this is an area that you want to be dabbling in. This is nice to get very tight entries. Not gonna lie, because even to there, it's like a, oops, I misclicked, but I think it was like a current price to bottom. Current price to bottom. Like you're at like a 5% type of risk on this trade, which you've seen can make some pretty rapid moves. The ATR in the last 20 days is pretty low, but we've obviously seen the explosive nature that this name can have and the respect of those moving averages. So for a tight entry, I understand it. If you aren't somebody that likes to try to trade off of this area. Well, there's no problem with that because this is hopefully going to form a pattern, hopefully kind of create some lower highs and higher highs, higher lows as it starts to make its way, or really higher lows as it starts to make its way toward the breakout. And then you could either look at that all-time highs, or honestly, I'd even look around here, this level, this 185.67. Um, so I can see somebody wanting to take a tight entry here if your portfolio has the risk appetite for it, if you have the risk appetite for it. And this looks very, very uniform in constructive, which is beautiful. Very similar to what I saw in Eli Lilly and Crowd. The difference with Eli Lilly and Crowd, I think it was just the groups that were clearly leading. So, and you know what? I stand correct because software is also leading too. I'm just, you know what? Who put this up here? Beta, you got a name on my spotlight list right now. I'm gonna have to think about whether I want to add risk right now in this type of market, though. More relevant than getting outcome. Market search on top of. Yeah, dude, Deepvue. Look, I used market search for years, years. I used it when it was Market Smith. It's what I traded through majority of my trading career. In the 9 years I've been trading, I've only been using Deepvue for about the last year and a half, 2 years. And every other moment of my trading was using the IBD tools, but just don't like, once they sold, I don't like what was going on. Also heard a rumor that William J. O'Neill and Company is coming out with Market Smith, which would be interesting to see that kind of play into the what's going on in the market. Their price point probably going to be higher. They're more towards institutional traders, but it's just interesting to see things coming out. Catching the five, explain that to catch the five and ride. So I don't know why you didn't just sell and buy it back. That's to my wife. 10 plus ADR, go home. Yeah, higher ATR names are nice. And I was talking about this today. Just because the name's high ATR does not mean it's something I stay away from. If I can get a uniform chart pattern and a tight risk entry, that's ideal. If I get a nice tight entry on a high ATR name, risk reward, baby. Guardian Health, this was the name I was kind of watching. I think the real entry point for this name was coming through this area right here and breaking out there, because we had, even if you bought out here, you still had to the bottoms was like a 15% drop. So I think you had to trade through this tight range here. And which is why I kind of stayed away from it. But there's no reason that you didn't have, if you're especially looking for breakout buys, which in this point in the market, I wasn't really looking for more breakouts. I was looking for tighter entries. This broke out and this has moved and this looks beautiful. Guardian Health looks great and definitely a leader within the healthcare space. Hinge Health, another one. Look at, we're seeing this a lot with those healthcare names. Big bases, all-time highs, tight action, ride the moving averages, pull back, reset, digest, catapult higher. Beautiful, beautiful name. Extended, beautiful name. Bobby, I know you. I'll have you know, Peg looked amazing before it faded 9% today. Yeah. Look, it's acting like the market. We're choppy, right? It's looking great. It's trying. It's just it's chopping, which is what happens. Which is why I'm being patient, right? Which is why I know in this type of market that even names like Peg, all right? Well, look, we've talked about this. I think I've talked about this multiple times. MU, when you go back here, right? When the market was choppy, people were like, MU's breaking out. I'm buying MU. And I said, I'm okay. If it goes without me, it goes without me. It is what it is. The market is not in the mode where I'm putting on new risk. And if it wants to take off and it wants to leave me in the dust, I am okay with it. I am fine with it. It is just part of the game. But this environment is telling me I'm not putting risk on. And that's why I pay so attention, because it broke out and it completely reversed and dropped 33%. And then it gave another opportunity, and then it tightened up, and then it moved even more sideways, and it got even tighter, and it actually had a nicer, cleaner, tighter entry, and then it started to break out. And this was the day I bought it on the 22nd, right off those moving averages, which even then was still, I think I forget how my exact entry point. But then the same thing was going on with SanDisk. That was another name that during that market time, right, everybody was like, oh, it's breaking out. And I'm like, the market is not where I want to put risk on. It dropped 28%. and then it tightened up, and then it took off, and then I bought this on the 8th on the follow through day right here, um, where we kind of had another pullback within the base. We came up, we squatted, and this was just what I felt was the leader at the time based on relative strength. And the follow through day telling me to buy something, I wanted to buy what I felt like was the leader, and that was the name. So, point being, when we got a market environment like this and a name that looks as strong as it does, I am much, much more patient. I am fine with things breaking out and looking like they're going to leave me in the dust. And I'm trusting more that the market environment is telling me to be patient, and I am okay with it going without me. But this kind of showing more recent action showing this wants to trend sideways with the market for a little bit. And if the market can relieve its pressure, this should hopefully skyrocket. Fair value, gap, bases, flags, buy on breakout. Momo offering 8.1% on API in cash. Are we switching or not? I never played around with Momo. I'm a Schwab guy. And tap. The wife comment about MXL Bobby. I know you're catching up to that. Yeah, no, you're right. Way I see ping, so resistance. I definitely got a bit of preemptive of my aggressive. I'm expecting the market to get back to another momentum cycle, but we just aren't there yet. You're not wrong. And that's it. That's really, to summarize. The market's just not there yet. That's what it is. How do you execute an entry on tight consolidation? Do you use volume with a move up to execute the order? How to not get left behind? Well, the reality is sometimes you are going to get left behind, and that's just how it is, because you're not going to catch every names, and sometimes the setup just isn't there, and some names are hard to catch. Volume does not really play any entry into me buying that day. I look at volume in the overall a technical analysis, but I'm not necessarily requiring volume on the breakout. But most of the time when I'm looking at a tight entry, it's one of two things. Either it's so incredibly tight and hugging to a moving average that my risk is so small and I will buy into that tightness, preferably on some sort of an inside day, or I'm seeing a short-term area taken out. So if we were maybe even here, like just something like simple where just taking out the prior high or something like that of another day, bouncing off a moving average, just something showing me that it's like broken the really tight short-term downtrend. Like here could have been a good example. Oops. Like through, what am I doing? I don't need to draw this line. Here, come on. There we go. Here's a great example, right? Tight, 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 tight. Oh, pull back, tight. Okay, here broke out and holding above that high and looking strong. Right. So that's kind of sometimes what I'll look at on these tighter days. And I'm sure you could even use a 1 hour chart to something like that, right? If we're looking all this tight action and then maybe whether it's this day right here, something, this bar right here in this hour, June, was that June 26th? Does that line up what I'm looking at? Yeah. So a lot of opportunity and ways to do that. BB, I'm up 40% BlackBerry. I don't tell a lot of people this. In my I have a Robinhood account that has like a couple shekels in it. And it was like one of those promo things I had bought. I think I was like gambling on some random stuff with it. I had bought BlackBerry somewhere last year before it collapsed, because it just looked like kind of like a tight bottoming type of want to start to uptrend, and it collapsed and I sold it because I still, even with the small amount of money, I still have stops. And it was just not the type of stock I want to trade in my normal portfolio. It was just more of like a fun little thing and a really small thing I was messing around with. But yeah, this thing's been taking off, looking strong. Great stream. Thank you. Thank you. I just buy when it breaks out of that consolidation. I prefer to react instead of assume. Yeah. Oh, look, there's a lot of different ways to do it. A lot of what my style has gotten into is kind of these earlier entries, these kind of building of, where the basing is kind of bottoming, the trend is kind of changing inside of the base, and the downtrend is looking to end. And now it's looking that if I have the opportunity to build within the base, so that when I break out, I can even add on top of that, which is really kind of like this is right. Crowd is like exactly what I'm talking about. Being able to build a position in here. And then now if we get another handle, I can get pretty heavy weighted in this and my risk is really, really small. And again, this is how I start to trade later in an uptrend. Early in an uptrend, I'm a little more traditional breakouts because that's just tends to be what is clearer and works. Depends on the ATR distance from low of day. I prefer entries to get me more size. Yeah. Yeah, it's look, everybody's got the same different styles, and you got to do what really works for you, um, and they're all going to work better in different markets, right? We're in the type of market where breakout trading gets very, very difficult because we break out, you buy, you get stopped out. You break out, we buy, we get stopped out. You break out, we buy, you get stopped out. The choppy environments suck sometimes for these breakouts. Where things like this, things like crowd that are really tight, really low risk and holding levels and coiling up and are like, we want to go, but we just can't because the market's kind of not letting us go. But there's this rotation. These names are where I start to shift towards that style versus the breakouts. Follow through day, leading name, breaking out of a base all day. But that's kind of, and this is something that people do also forget. Breakout buying, CANSLIM style trading. When you look at it in the terms that's written in the book, oh, you guys can't see it on camera. In that book right there, How to Make Money in Stocks. When you look at it in the context of how that book is written and how it was traded, and Bill's time frame with a lot of these names and longer position trading, he's entering a lot of these big, big winners coming out of bear markets where it's very clear where the leadership is, where these growth names are screaming, where the industry groups and the leadership is so much more clear because the relative strength is sticking out, similar to how it did in the short term little correction we had in the beginning of the year. That is where that whole style is built on. And I think where people get crushed is they start trying, they go, well, we're in an uptrend. We're still like, we're holding above the 50 now. We're in an uptrend and you're buying breakouts in a choppy market. That's where things get a little tough. So, that's one of the things I always tell people is, the CANSLIM style is perfectly designed coming out of the correction. And a lot of it is designed to buy coming out of the correction, ride a bull market, sell after a massive, massive move. But with that also being said, as great as it sounds, in a name like SanDisk, right? You have to be somebody who can handle a 20% drop. This is not as big a drop. Coming from tops to bottom here, even if we pull back into the 50 here, sorry, so 21 here, 13%. You got to be somebody that can have a big, and this is where people don't give Bill O'Neill credit enough. He'd be so heavily weighted in a really, really strong name and sit there and watch his massively, probably over 50% weighted position in his portfolio pull back 20% in a week, but hold its moving average and be like, I'm fine. That ain't easy. That's a lot easier said than done. And this is also where I love when people like bring up some charts, and a lot of people do this in their post analysis, and they'll be like, this is the name you want, SanDisk, man. You just ride the 21. Yeah. Well, tell that to the people that bought here. We're up a ton. We're up, let's just say 180 something percent. And then they just sort of drop rapidly 20%. And they had a big weighted position. Easier said than done, man. All right. Um, let's see. Hold on. The wife's texting me. Oh, no, she's texting in a group chat that I'm in. All right. So well, just another one of those things to add. So let's oh, you guys aren't even looking at my bad. Now you can see what I'm talking about. Riding the 21 day. Yeah. Let's sorry. There is a little bit of a lag if you guys haven't realized over time that the chat and what you guys see lags, I guess, slightly behind what I'm doing. But yes, there you guys go. There you guys can see it. There's your 20% drop. There's your ride in the 21 EMA. So easier said than done. All right. To cap it all off, there are going to be environments that are very, very easy and it's easy to make money and it's great. And you want to make sure you ride those trends. And there are going to be trendless markets in the short term and choppy markets and difficult markets like we're in now. I rather sit out of those markets and be very, very, very adverse to adding new risk and wait for things to develop to get me into the market versus try to catch every single opportunity and get chopped up. The risk of that is could be and there will likely be names that will move without me and I will watch them go and I will say, "Oh well." But that's part of it. That's part of the style and that's part of being confident and patient because you don't have to catch everything, right? You could be having an insane great year right now. Would it be great to have even more of a great year and catch the next giant winner? Yes, but that's just not the reality. You're not going to catch every single big winner. There are people that do not have SanDisk, that do not have MU, that did not get, um, you know, did not trade NBIS and get this down. Who's I just saw somebody say something about average getting in around 80, right? There are going to be people that don't have these three names and are still having a very, very good year buying other names that, that performed well, right? There's so many names out there. So don't be afraid of letting things go. This is a game of probability. If you didn't see, I put out a tweet or post, whatever you call it nowadays, on X, comparing poker, specifically Texas Hold'em, and trading, and it is so similar. There's the novice person who's a gambler. They're there. They want action. They're playing every hand. The big thing I said is like, and this is what reminds me of the choppy market, right? They have a hand that's like, it's okay. It's not bad. It's not good. The flop comes and now their mind starts going. Now they're going, if this happens, I can win this huge pot, And that's what people are doing right now in the market. They're like, ooh, if this is the bottom right now, if this latest bounce that we had, I'll just bring it up even on the QQQs, right? If this latest bounce off the 50 is the new low, or not really low, but whatever, and now we catapult like we did here, I'm in it. But they're not thinking about the other side. What if we're just chopping around through here, or what if we're making lower highs and this isn't the low and we're just going to reject from there, and that's where I think it's extremely important to be patient and understand there are going to be easier markets, and that's where you want to really push things. That's where we want to be aggressive. That's where we want to have a lot of risk. And markets like this, where I'm not saying you have to sit out totally. I'm just saying that the risk you're putting in on this market needs to be much more calculated and much tighter than what it was when we started having this uptrend. And regardless, like even on the follow through day, if you go back and watch my videos from the follow through day, I said this follow through day may fail, but it's the signal saying to buy, and I'm putting some risk into the market, knowing I may get stopped out and this market may roll over. And then as the market continued to follow through, continue to prove itself, my appetite for risk continued to increase. And that is essentially how you go in and out of a market. It is very rare that I am going from 100% to zero or 0 to 100% invested. The market is slowly giving those signals, and the environment is slowly morphing, getting me in and getting me out of the market. We look back into this, right? I didn't just sell out over here and then just sit out. And granted, I did handle this poorly. I didn't follow what I'm saying right now in this choppy environment. And I did give back some, but, um, and I did trade a little bit into January and made some good progress to start the year off around this time frame. But, I wasn't completely out of it. It took a couple days for me to really get out. And my risk appetite changed. It's not My risk appetite didn't go from like super risk on to like risk off. It went and it slowly morphed until it was nothing. And then the same thing here. It didn't go to full risk on. It slowly pulled me into the market. And that's what got me into the uptrend. And the same thing's going to happen here, right? My risk appetite has changed, and it will slowly change in whatever direction that this dictates. But I think it's very important to be patient, because this is the last thing I'll say. All right. We had everybody saying expectation breaker. I think I already said this, but I'm going to repeat it for anyone who wasn't there. Oh, shoot. All right. Well, hopefully you got the context of what I was saying. I think you guys know the market if you've been trading. I'm not going to go back through all that. I think you guys got the context, or rewind it, because this will be recorded, and then bring up the chart and you'll be on the QQQs. You understand what I'm saying. But this is the nature of a choppy market, right? You have people here and here on Monday and Tuesday saying expectation breaker, look at these leaders returning. That is what a choppy market environment is. That is what happens. You get those powerful moves that make people get those emotions that, oh my God, I'm losing, I'm missing out. Everybody else is making money. This is it. Everything's turning around. And then you get a day like today where we saw a lot of these names getting crushed. That is the nature of a choppy market. And now, to answer a lot of people's questions, well, how do we know we're in a choppy market? We had this big sell-off, and I had said it when we got here. I don't expect a pullback like this to resolve vertical to the upside. I expect some sideways action. It followed expectations in chop. So just understand, there's going to be opportunities, going to be times where things are going to feel like, oh my God, I got to get in. The market's moving. Everything's moving. And then you're going to have days like today that, well, where everybody, what was the phrase people were using today? It was all over. Window dressing, I think was the name. Giving you that facade that things are great, and yeah, you faked out. And I was also saying, I think the low volume was something that was paying a little concern to me. But so right now we're sideways. I'm being patient. I'm willing to let things go on without me, and knowing that's just part of the game. And I'm looking for some more tightness, some more constructive action, and things to just get a little bit less choppy and a little bit less volatile, and hopefully get its way to make to a new point. And if we could start breaking out of the downtrend, if we could start making a higher high even in the short term, that's what is going to have me start to increase my appetite for risk. We have a clear line in the sand of when to get aggressive, and I should probably use it. Yeah, 100%. So that's all I got. Hopefully this was fun for everybody. I prefer doing this than sitting there typing, number one, because I suck at writing, and it takes a lot of brain power for me to write things out, and it's a lot easier for me to just talk. And then I also kind of double the work because I do my routine, and then I write everything and re-look it up, and yeah, regardless. Thank you guys. I appreciate everybody coming here live. If you are watching this for the first time, live or on the replay, know that I do this every single weekend. Every single weekend. I think I've maybe missed. I don't think I missed a week. Did I miss a week? I might have missed a week. But yeah, every weekend. Subscribe to the YouTube channel. Know that I'll post basically when it's scheduled, when I'm doing the live. And if you miss the live, there'll be the recordings. And you could also, like I said, you can go back and see how I handled all this stuff as well. So that's all I got. There it is. YouTube, X, Discord. Appreciate everybody. Enjoy the rest of your day, and I'll see you guys this weekend.